I have I have a question. I
Yes.
have a question in regards to the cases we did last week. So I went back to two of them.
Yes.
For the first things first. For the segment, for the
Reporting.
segment reporting, the that case we did with the segment reporting. My question is, what do you do when you're doing note disclosures? When you're to hit depth, if you just give a summary of what the handbook says, does that give you a mark, or you have to explain each key point of that disclosure?
Let's see what the. Let's not guessing here. Let's go
Hmm.
directly to the case and let's see what they want, because they always want something, right? Always
Yeah,
want something. What was that? May 2023, right? Was it?
yeah.
Day one report. We're not doing that one. Day two, market-based approach. That's not probably. Which page was that? Do you remember? Competency map, evaluation, enabling. Audit.
Um.
Recognition cost, that's not the one. Recognition cost, that's not the one. Technical
It was not
competency.
Tasty Meal Basket. It was the other one. The one we did on Sunday. No, we did Tasty Meal Baskets
Assurance.
on Sunday.
No, we did. So the segment reporting, I know the segment reporting. The segment reporting was assurance role, but
It
you.
was actually, yeah, it was Tasty Meal Baskets. So if you go on page, hold on, I have it open here.
Oh,
It's on page 126 of the report.
126. Oh,
126. That's when, because like the funny thing is, like when I did capstone too. Okay,
can
I
you
looked
share
also.
share your screen? Share your screen, please.
Okay, give me 1 second. Share screen. Share. So this is the
Right.
yeah, this is the note,
2022
right?
September. Okay, 2022 September. Okay.
Yeah, I'm gonna
So
just open the feedback guide as well to show
right.
you. Like, this was the feedback guide, and this is what it speaks on. System conversion, operating say. Okay, so provides the examples of required disclosure, right?
Organization of the segment, type of the product, financial
Yeah.
information, reconciliation, restatement are the valid. So
So
in order to, so let's say, uh, partial, not partial, if two attempts or one criterion discussed. Yes, if two criteria discussed. Discussed. So discuss. What means this? It's very confusing here with this things here. You can see. Discuss would mean technically correctly discussed.
mhm,
Discussion of criteria, incorporating the relevant corresponding supports where applicable.
mhm.
So you need two yeses at least. Either the organization provide example of required disclosure. Consider 75 so organization. Do we have anything like that on the case? On once you go to the solutions, what exactly they say?
So
Or
now that's the funny thing, because let me just go into my downloads. Test email basket. Uh, um, Wait 1 second. I have to log in. CPA Canada. No. D2L. Content. I'm just gonna go.
okay.
Why didn't you prefer the Korea National Mountain? Item update to debrief. There we go. So the PDF. I'm just gonna assess the situation. Um, so this is all that the specific disclosures are required. They're kind of, to be honest, this is not even too much in depth, or it
No,
doesn't really show a discussion of what, but they're
no.
just listing as well.
Yes.
So
But they're asking for discrete specific disclosure which are required. That the operating segment are recognized around the geographical type of product services for which operating revenue. The
but
profit and loss.
there's
No,
no
there's no
incorporating case facts.
yeah, no. This is just a it's directly from the standard.
Yeah, exactly, that's what I'm saying. So now it does how, because like,
So listen, we don't you don't have much room for interpretation here. If the standards require this, that's what you have to do. End of the story,
okay.
right? It's
Mm-hmm.
disclosure. What you can you interpret it? So how you interpret it is disclosure. It's required by the standard. If the standard required that, that's what you're gonna give them, right? You cannot come up with something new because that's not given from the standard. So for those disclosures, do you need to know them? Uh, I would say you need to use the standard more effectively.
Okay.
But that's gonna come again with the practice. With the practice, how the standard how the to see to what extent in answer they're using the standard. So you can understand what
Oh,
exactly you have to do. Make sense?
okay.
That's
Makes
where
sense.
the key will be. Do you understand
Mm-hmm.
what exactly how to get the answer from the case and from the standard?
Yes. Yes,
It's a
I do.
very specific, it's very how can I say very technical, very there's no much room for interpretation or discussions here. It's disclosure. You have to disclose it. Why do you have to disclose it? Well, I can make a discussion now from the user point of view or this point of view, but at the end of the day, the only reason I'm disclosing is because the standard's asking, right? This is not
Mm-hmm.
like a additional disclosure that you have to do. Those are
Okay.
specific disclosure that you have to do. Can you disclose some additional information? Yeah, you can disclose some additional information, but that's uh, what will be that information? That will be something to a little bit more to what the standard already wants.
Okay.
It's not like a writing essay here. You know what I mean? But fairy tale story, it doesn't work here.
Mm-hmm.
Standard ask you this, you're just giving them the standard. That's it, end of the story.
Okay. Okay, that's fair game.
So that's why I want you to understand. I want you to literally go over the answer so you can see how the answers literally using the standard and the case facts.
Mm-hmm.
And you to start doing exactly the same things.
Okay.
That's gonna save you time on the exam. It's gonna give you the confidence. It's gonna boost your ability to read and understand everything.
Okay.
But it's gonna come with practice. You have to practice.
Mm-hmm.
I mean, seriously. When you're planning to take this is in May?
Yeah, me.
May. Um, Now it's February. I know it's almost March. I know you're gonna say it's too early, but I want you to start getting there.
Yeah. No, this week I'm gonna start prioritizing studying as well. Like putting in much effort. Cause
Uh,
I now know we're getting closer to the exam. Plus I want to read the ebook. I want to understand because I've noticed that every time I read the ebook, I'm getting better in understanding how to get to the solution.
right,
Because I had that gap that I didn't fill in my previous study plan for last year. I
right,
didn't know things in the ebook, so I'm kind of surprised that almost every answer is in the ebook. The ebook already tells you what you need to do and what you need to expect. It's now just like arranging on how my approach and combining my knowledge from the ebook.
right, right. But the other thing is, I don't want you. You don't have to spend too much time here. Do you understand? That's another thing that I want you to understand. You need 2 hours power study.
Okay.
That's all you need. 2 hours per day power study. But
Mm-hmm.
in order to do the power study, your mind has to be fresh.
Yeah.
After work, and after cooking and start studying, not gonna work. Let's be honest here.
Yeah. I need to like nap and then wake
Yes,
up with a fresh mind.
yes, and then start study for hour and a half or 2 hours, and then stop
Yeah.
and try to develop that how can I say that routine every day. It's gonna be hard in the beginning, but after the third or fourth week, you will want it.
Mm-hmm.
That will be the interesting thing. In the first time, you force yourself to do it, and after that, you see how you want to study,
Yeah.
and you're gonna feel guilty if you don't study.
Yeah.
And after you pass the CFE, you're gonna say, "What I'm gonna do now?" No, I'm serious. So
Going to
that's
go
why.
do my MBA.
Yeah, no, that's what I was thinking. I'm studying and putting all those hours every single day, become a routine. And I was studying in one coffee shop every single day. The owners of the coffee shop know me. Everybody knows me there. They know when I go there. That and the girl, the lady was a very nice Korean lady. And every time when she see me, she was so happy. I say, "Oh, you're gonna be super smart. You're gonna be super smart. You always study, study, study." Right? That kind of attitude, which kind of give you like a good boost, right? And and after I get that certificate, and then evening comes and nothing to do, right? you like your all your routine that you had for years is suddenly gone,
Yeah.
and then creates another thing. What I'm gonna do now? But create that routine first. Create the routine, then you're gonna figure out what to do later.
Okay.
Okay.
Yeah.
So let's go for next one. We have to. I want we to cover more issues so you can see more interesting things because every case will be different. Every case different until they become to look like the same.
Okay.
Okay. So which year
Yeah.
are we doing now?
Um. Let's start at 20. Okay, I'm gonna open downloads. No. Um, Let's go to 2015 September.
2015 September. I think we
We
did it.
we did KMed, right?
Yes, we did that one. Last time we did it. Let's move to 1 year later. 2016.
Atlantic Shellfish.
Okay,
This
let's
was
go with that.
yeah.
Oh, you getting it from Capstone. Shall we go directly to the CFE report, or you want it from the Capstone? Let's go to actual exam.
Okay. Let me
You know
stop
what I mean?
sharing because I don't have the
I have it.
okay.
I have it. I have it. 20, you say 2016.
2016. Yeah.
2016, day 2 and 3. May or September? We have it 2 days in 2016. I don't know what they had 2016.
Really? They have May and September?
Yeah, that doesn't make sense because board of the examiner. Let me see what they're saying here about the day 2.
Because I don't even I only have Atlantic Shellfish. That's the only one Capstone gave us. They didn't give us one.
Yeah.
So the
No,
2015
that doesn't seem. That's a very small report for the one that they did for May. No, it's very small report. It's more like it's like how many pages is this? 39 pages. No, that doesn't seem right.
So, but is there a case?
Examiner report May. Let me see. Version 1, version 2, day 2 simulation row, day 3, 26. Yeah, May 26. It says 172, page 172. Looks like there is.
Yeah, we can take a look at that one.
Okay,
Because
172. Let's go there.
okay. Can I have the case? Everything, because I don't even
Yes,
have
yes, absolutely. Let me see if I can share here something with you. Can I share this one with you? Oh, I can send you email. Let's just a second. Sometimes, sometimes you have this technology and you're forgetting that you can actually send the email as well. Right? Attach computer. Here we go. Send.
Okay. Just waiting for it to reflect.
Yes. Okay.
Okay.
So here's the case. That's 2016 May. Huh.
Yeah, just
Atlantic Shellfish.
Oh, so what was September? Because Atlantic Shellfish, I have it.
You have it?
No, when
Here that says 2016 CFE day 2 simulation.
yeah, was there so what do you know what they had in September?
In September, yeah, I sent it to you too. In September, they had you had 3 files. I sent you 3 files. In September, they had the one day 2, day 2, page 58. December day 2, they had Tanko Co. Limited. Tankco, privately owned corporation, manufactures and sells steel tanks.
Interesting. Okay.
Yeah.
I know both cases.
You know both
I've
cases?
seen, I've seen Tanko. I'm pretty sure I have Tanko too. That's weird the way they separated them because it seems like, huh, interesting. Okay, we can do shellfish. Atlantic shellfish.
Yeah, let's go with this one and see what we can get from here. What was that? Atlantic Selfish, privately held company. So let me see if I can copy this and flip it again on the Word document. It should be. Also, the earliest report are very friendly. It should be okay. Yeah. Surprisingly, it works, which doesn't make sense, but it works. And we have it in the Word document. Amazing. Thank you, CPA. Thank you, CPA. You're so helpful, right? Let's go here, Word document. Now, Atlantic Sailfish, that's a privately held company.
Oh,
Okay, that's the
Tanko.
first thing. Privately
Aspi.
held company, right? Operating since 19, located Prince Edward. Harvest, process, distributes, and markets lobster and red sand clams.
It sells primarily
Yeah, Canadian
to.
US sells primarily to large. So you see this, you have now this market here in US. Sales primarily to large grocery retailer and restaurant chains. Sell food objectives to leading supplier. The clams and lobsters will know the respective brand name. Okay. Owned by 60%, 40% of this. 70 years ago, group of employee invested 20,000 each and received a total of 10,000 Class B common shares, allowing ASA to raise 1 million in equity. There currently owns 15,000 common shares, having paid when the first approach about becoming Class B shareholders or employee group was promising return on investment at least 10%, 10% annually in form of dividend commencing no later than 2014. So 4 years later, the class shareholders recently voiced concern about the return of their shares. In lieu of the original contract's terms, Class B shareholders are proposing an exchange of their shares for retractable preferred shares. Ooh. The board of directors consists of Daryl, who is the CFO chairman, and the board, and the 7 representative board Class B shareholders. Okay. The board meets quarterly, review reports today, February. Okay, now today. That's what we're looking for first thing today. On January 1st, CFO for the past 20 years passed away. Nice. All right. On January 14th, the CFO passed away. There you go. That's your
Most of a
assurance.
P.
Your assurance, you know what's going on, what that means.
Yes.
The company is in the process of hiring new one. For the last 4 months in 2016 fiscal year, the CFO has been not well. Okay, that's another thing.
Oh, controls.
Right, and not be able to perform his duty. His work was delegated to the accounting staff, including preparing for the financial draft. Okay, the accounting staff is doing this. The draft financial statement provided appendix 1. The board has one committee,
An
audit
audit
committee.
committee. Yeah,
An
let's
audit
highlight
committee
that.
means, yes, they have audit committee, right?
Yeah, so that
Which meets
reduces risk.
quarterly to review the statement. The committee met yesterday to review the draft financial statement before submitting them to the auditors. Extract of the meeting minutes and appendix 2. Government regulation industry information. The Canadian Federal Department of Fishery Oceans regulates the amount of the harvest by using license for specific species. The license has unidentified life, indefinite life. Nominal fees paid every each each year to maintain each license. The TFO, what's the TFO here? TFO, all this agency sets the annual total allowable catch by species and by region. Inshore fishing, offshore fishing, those quotas designated to participate, particular enterprises may be transferred, traded, or sold. Offshore fishing is dominated by few large integrated companies similar to this company, all large vessels, and hold significant quotas. Smaller companies, individual, tend to hold the inshore fishing license and utilize more boats and less complex equipment. Its industry practice determine volume and pounds rather than kilograms. Okay, so we are on pounds. All right, that's the beginning. Let's see what's next. Oh my God, I'm excited now for this case. Let's see what's happening next. Insurance. Let's go with the assurance. They give you the assurance requirements. That's the good thing, that assurance always comes first. You don't have to go too far away until you get to the assurance. Oh no, there's a still common background here. Continue, 175. So we have still more common background. Let me flip this one here. Common back continue. ASI owns one Canadian offshore license for clams, which allows the annual quotas 1 million pounds of clams. This amount represents 23 of the total allowance offshore catch designated by this company. Also has 3 Canadian offshore lobster licenses, which is the total allowable quotas of 600,000 pounds. This amount represents 28 of the total allowances offshore catches designated by the ministry. Holds the no inshore license, but purchases additional lobster from the suppliers who have inshore license. In 2026, a total further of 1.2 million pounds. My God. Okay. Renaissance clams. Sales clams total 20.5 million in 2016. Clam fishing is not seasonal. During the 2016 harvest, 4 million pounds of clams. Also, one vessel is used exclusively for the harvesting clams. The clams are taken to the plant to be shelled, blanched, frozen, and then shipped. This company has been planning to purchase one more vessel that will allow to. Okay, so we have purchasing one more vessel that allows to harvest the remaining annual offshore clam quota, additional 6 million pounds. The German supplier has tentatively been selected to manufacture the vessel. So German suppliers know you have to probably on the audit procedures how it was elected. Estimated cost of $45 million. The processing plant currently has express capacity available that could be used to process the additional catch. Darrow recently informed the board that he would be meeting with the bank soon to review the year-end results. Darrow stated that he will ask the bank manager to increase the line of credit in order to help the finance to purchase the new vessel. Lobster. Oh, with line of credit, they're gonna do this, huh? Interesting. So sales of the lobster total that much. Also has 2 vessels lobster fishing. Lobster fishing is a seasonal, with the peak period early spring and late fall. Once the lobsters are caught, they're taken to the plant where they're sized, graded, and sorted and inventoried. Some of them keep alive in the storage facility for up to 3 months, allowing SEC to sell live lobsters after the season has ended. This is unique in the industry as no competitors have similar storage facility. As customer order are filled, the live lobsters are packed and shipped by overnight courier to ensure the delivery is within the 1 or 2 days. Supplier bonus arrangements, in addition to being paid, the client paid the catch. Inshore lobster suppliers who have been supplied for 5 years or more qualify for the bonus. Currently, 20 suppliers qualify for the bonus, which is calculated based on percentage of the loss of profit. In 2026, the bonus is substantially less than 2015. Additional information for your all is presented. My God, that's a lot of information. So let's see what we have to do here with this. Assurance, you, CPA, work as an employee, CPL, no, so now we just employee, not the other one, the other. We're just employee, nothing more, nothing less. Recently, you met with Sarah Chin, who is the partner of the firm. So will again perform, okay, so that's a repetitive, again, that's a repetitive audit. Year-end audit. Although in 2016 year's end audit plan was completed in early September, some additional issues have arisen that may require changes in the plan. This morning, Daryl contacted Sarah to discuss the audit of the financial draft 2020-60 financial statements. Daryl is meeting with the ASA bank manager next week to review the draft of 2060 financial statement and covenant compliance. He would like to promise the bank that the final audited statements will be available 3 weeks from today. ASA Audit Committee has expressed some concern about the initial draft, and Daryl has asked CPA to review the draft financial statement. Okay. So what we have to do, review financial statements, discuss any accounting issue, identify any accounting adjustments required. Ask you to complete this work. So we have to review, discuss, and identify accounting adjustments. Sarah says, I would, okay, so what else she said? I would also like you to assess risk factors of this engagement. Given the current circumstances, ASA provides me with the recommended
audit plan.
But materiality, performance materiality. So we know exactly what we have to do. Assess the risk factors, provide your recommended materiality, performance materiality. Be sure to also discuss, now we're going further, any changes required to audit approach. I would like to know whether we will be able to rely on the control again this year, and on, if not, what, okay, we have to perform. So we have to discuss on the project approach, and to know, no, we can, or yes, we can rely on the audit control. And if not, what we have to do. Sarah also is concerned about the acquisition of the Frenzy and Shell Co. I would like you to recommend substantive procedures. Let's choose different color. Related to the balances that acquisition at the acquisition date and at the year end as part of your audit plan. In addition, implemented a new ordering and invoicing system in 2016. Based on the discussion with Darren, there have been many customer complaints regarding the incorrect invoices amount. Darren, with those dealing with those complaints has added to the accounting staff workload. ACA would like to help, in evaluating system. Sarah asks you to identify any control weaknesses first and to suggest improvements. Okay, finally, let's break this one in pieces. Finally, the suppliers are concerned that the amount they are receiving as a bonus is not fair and feel they're being undercompensated. As such, Sarah asks you to verify the calculation for 2016 bonuses first, and second, to highlight any concerns regardless the fairness. The supplier have also requested a special report be prepared assessing that the amount is calculated in accordance with the formula. ACI has consented to CPA LLL taking on the engagement. Therefore, Sarah has asked you to identify potential special reports. Discuss the representative. Discuss their representative advantages and disadvantages. Second, and third, to recommend option the best meet the needs of the suppliers. She also like you to design appropriate procedures based on the special report you recommended. In addition to assurance. Okay, a lot of stuff, huh? We have to review, discuss accounting issue. That's probably part of the financial reporting. And then we're going to Euro. Okay, let's jump now to the answer and see how the answer starts and where we're going with the answer.
Okay.
Okay.
Mhm.
And we're gonna go flip back and forth with the answers. Okay.
Okay.
So for that reason, how can I do this? Page 60. Let me write down myself. Which page from which page? I'm having what? 60. No, that's not the one. Just a second, because I'm mixed now with the cases. I have two open cases here on my screen. And I think I missed them. Got it. Back on track. Okay.
Yeah.
Finance, we don't care. So financial statements, that's that page 180. 80. You even have this meetings as a common thing. Oh my god. Okay. $191. Let's go to the answer. Do they give you the answer here? I don't think they're giving the answer here.
For Atlantics.
Yeah, for day 2, I don't think they're giving the answer. Let me see on the other document commencing day 2 and 3. Simulation May. Audit committee assures common require average. No, they're not giving the answer here.
That's weird.
Yeah, I agree with you. Ukraine. They're
I
giving
think
the examiner stuff, but they're not giving the answers with anything. Let me see in September report.
they're giving like they're not really giving like the same way they gave the other case.
No, no, they're not giving that way. No.
That's weird. Yeah, it's
So there's not much we can do here, Howie. Comments. We can just guess in here.
I
Where
do
they're gonna
have
go?
the solution. I
You
do
have the
have the
solution?
solution from
You do?
Yeah, let
Is
me
it
send
from the capstone 1 or capstone 2?
Capstone 2. Yeah. Capstone 2 has the solution.
Okay.
Let me send it to you.
And let's
Yeah.
go over the solution. And you have the feedback guide, right?
Yes, I'll send you both that. Yeah, because this is a bit.
It's a bit too much. That's a oldie, and they asking too many things here.
I
Not
know,
for the
but because this case was so hard, it had like the purchasing of a company goodwill, business combinations, and then it just had the covenants. It had like it was a hard case, to be honest. It had too many expectations. Okay, I'm gonna attach it.
Okay.
Sorry,
Okay.
one
I
second.
think we get all the assessment opportunities though.
Yes.
So about the assurance role. So I have here. Watch this. Let me see what I'm sharing. Here. So the first thing that we have to do, we have to assess the risk. Risk partner asks you to risk factor related to the year-end audit, given the current circumstances. So that will be related to the first thing that we saw: review audit financial statement, discuss accounting issue, identify accounting adjustments. That's not the one. That one starts. The risk starts on the Word document here. So this is the first one. You see, in the beginning, they're asking to review draft financial statement, discuss accounting issue, identify accounting adjustments. This is all financial reporting. As much as we like to do something about it, that's financial reporting. Then we're going to the assurance. First, to assess the risk. That will be number 1 here for us. Assess the risk factors of disengagement given the current circumstances. That's the first thing that we have to do. Second thing, we have to provide the discussion on the materiality. And that becomes the second assessment opportunity. Watch
Okay,
this.
I just sent you 2 emails. So you have, in the first email you have the feedback guide. In the second you have the solution.
Okay, awesome. Watch this. Now we have to do the risk assessment
Mm-hmm.
related to year. Then we have to do the materiality. Overall
Yeah.
performance materiality, both materialities. Then we have to do the approach and procedures for freezing. So let's go back to the Word document. Did we get those one? Discuss any changes require audit approach, yes. And if we can, now we're gonna go to Freezy, recommended substantive procedures on Freezy, okay. Then we have to go to help the evaluating system on the invoicing system. That's for the new invoicing regarding incorrect invoices, dealing with the complaints added to the accounting staff workload. Would like help with the account evaluating system, identify the control weakness, suggest improvements. Okay. Not this one. Wrong sharing. Let's go to the right one. Procedures for Freezy. Okay, we get the internal console procedures for the accounting invoicing system here. Then we're going to have the bonus calculation for the suppliers. Then we're going to have the special report that those suppliers need. And the last one is procedures for the report of the suppliers. Covenant and audit implications. Long-term debt required. I know that they're asking for money, but where that came exactly from the case?
The case mentions that there are covenants that he's meeting up with the bank, right? And he wants to make sure that they're in compliance.
Right. Because it's after this, right? Because here the last one we have to do is calculate the bonuses. Okay, we did calculate the bonuses. Then we go to this special reporting, recommend the option that best meet the needs of the suppliers. I'd like you to suggest appropriate procedure based on the special report you recommended. Special procedures, we have the special procedures. No, that means this one has to come from somewhere else. Anyway.
Daryl is meeting with the second paragraph. That one.
Darrow is meeting with the bank manager next to review the financial. We would like to promise the bank that the financial audit statement will be available in 3 weeks from now. Audit committee has expressed some concern about the initial draft. Darrow has asked us here to review the draft financial statement, discuss accounting issue, identify accounting adjustment required.
So when you incorporate the adjustments, right, it's gonna affect the covenants that you already had.
Right, right.
You're gonna recalculate them, and then you're gonna have to discuss if they're in compliance or not.
Right.
Yeah.
So that's why this one comes. I see.
Yeah.
Okay. So let's go now. Let's see. You sent me something. Yes. Okay, and the other one is the feedback guy. Okay, let's go. One after another. So let's not spend too much time on the financial reporting, core financial. Let's move to the assurance, chasing assurance only. Can we solve something on the assurance without touching the case? Again, risk assessment.
Yeah, risk assessment was pretty much straightforward. You only
Right?
need like 5 or 6, right?
Yes.
To hit a C on that one. Yeah.
So the preliminary review, financial statement, the company financial statement. See, discover number of errors. So this one is kind of related. You have to deal with the other one. But CFO become you don't need the case. I mean, we already know about this. That we already know that this is increased. That's increased the audit risk. Has recently invested in Freezy. We saw that one approximately merely. So the question is which to audit risk, right? We owe those increase the audit risk. Currently is breach one of the loan covenants. Accounting department prepare financial information to review to the board of directors. Implementing new ordering of the invoice system during the year, increasing the risk. A lot of the interpretation how the supplier bonus is calculated, that increase the risk as well. The thing is, the only thing that I'm seeing here is risk going up, increase the risk, increase the risk, increase the risk. If you saw the other day, we had some facts that reducing the risk. Remember?
Sorry?
Last week, we had
Yeah.
we had some factors that reducing the risk.
Yes, you have to put in at least 1 or 2 things that will reduce the risk.
Right.
In this case,
They always
what was it?
go negative, negative, negative.
It's is it the fact that we are it's a repeat audit, so we're kind of familiar?
Yes, that one might be the thing, right?
Mm,
That to some extent is going to give us the comfort that we understand the business.
mm-hmm.
But since the situation in the business has changed, that increasing the risk, right? So the things that going to reduce the audit risk will be the not familiarity here. The fact that it's a long-term client, repeating client, not long-term. Let's go with repeating. Now you have to be careful here with the terminology, because the terminology when you say repetitive client or familiar client creates a familiarity. If it says a long-term client, that means you already you might be exposed on the familiarity. But if you say repetitive client, then it's okay. It's kind of the repetitive client will be the key. Okay, so that with the risk assessment. Can you come up with those risk stuff?
Very easy.
Very easy. Okay, so this won't be challenge for you.
No,
And you have to finish with conclusion,
we're gonna set it at high.
right?
Yeah.
You have to go with the conclusion.
Yes. Always conclude.
Exactly, exactly.
No
No
matter what, even if you say you have a weak analysis, just conclude and keep it
conclusion,
moving.
conclusion. Yes, 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 yes.
Yeah.
Next one. Candidate evaluates the impact of current circumstances on the materiality and calculate preliminary performance materiality. Users. Who are the users of the financial statements? Bank and marine loan financiers, suppliers, employee and board of directors. Concerned with the ability to make the debt repayments benchmark based on the income before taxes would be the most appropriate. Common guideline 7% normalized income before. Is that from the standard?
Um
common guideline is 3 to 7% of the normal. Okay, that's a range. So you have to set up the number. Okay.
Yeah, you have to. So, 3 to 7. You usually use 5.
So Canadian Accounting Audit Standard 320 doesn't specify a specific range. Users needs and their objectives should again be considered. So this is your due diligence here, right? And after that, you have 6% of the income before taxes was used last year. I'll move to 5% of the income before. So it is reasonable for this year, especially in the light of the concern expressed by the supplier regarding their bonuses. Also, given the fact that there is no significant changes in users and other needs over the period, the percentage lower than 5 will not be used. So on one reason you're saying why you're using the 5%, and the other hand you're saying why you're not gonna go below 5.
Okay.
Then you conclude materiality needs to be revised as the auditor become aware of the issues affecting the calculation.
Mm-hmm.
Given the user's concern noted above, the lower materiality percentage 5% is used. So listen, watch this. Even though here you're saying 5%, in your conclusion, you're basically repeating whatever you said here. Here you're discussing why the 5% is kind of relevant for this case and why it's not below 5. And then in your conclusion, you're saying, okay, we're going with 5.
Yeah. Okay. So because there's a change, there's kind of like a change in the user's needs in the fact that they want to rely more on the financials, the suppliers, right? Have
And also
expressed their
the risk, right?
but
You
but
have
isn't materiality in general just based on the users and their need, not the risk itself? Because PM then takes into consideration the risk, right?
that is correct. Based on the users list. That's why we identify the users at the beginning, right?
Mm-hmm.
But the thing is, if I'm pressured by the purchases of the new machine, not the new vessel, right? I'm pressured by that, and I want to go with the bank. Obviously, I'm going to try to do something on the financial statements. So, in order to protect the bank because of the risk of purchasing the new machine, and that's kind of the risk. Yes, it can be looked separate, but they're some kind of affected, right? Because those are suppliers is the one that are relying on the calculations. And because of the risk of the mistake inside the company information system or whatever the system they're using, that might affect their policies. So again, we're reducing the materiality in order to respond to the concerns of those suppliers and the bonuses and the bank about the covenants that might be affected.
Yeah, the covenants might be affected. But the bank is not, the bank has always been there.
Yes,
The suppliers have always been there, but the suppliers have complained that something is
yes,
wrong.
yeah, because there's a change in the system.
Mm-hmm. Okay, I see.
Because there's a change in the system. The previous what was that? The CFO is having problem. The accounting team is the only one who's dealing with the problem now. The
Okay.
controllers is not involved anymore. So the one who probably used to do the bonuses is not longer involved.
Okay, sounds good.
But again, we're not reducing it that much, only with 1%. And then performance materiality. Performance materiality must be determined. We should set as a lower level, determine the PMO material professional judgment affecting the following auditors. So this is a perfect example of the structure of the answers when you see materiality. Okay, so
Yeah.
have it in mind. Users first. Once you identify the users, then choose the materiality which is appropriate for that particular users.
Mm-hmm.
Performance materiality must be determined and should be set as a lower level. The determining performance is a matter of the professional judgment and affected by the following: auditors' understanding of the entity. So the question here is, what affects, basically again, give you definition of the performance materiality, what drives the performance materiality. That's why probably this one is like a capstone question in terms of catching everything. Audit and understand the entity, updated the risk assessment procedures, the nature of the extent of misstatement identified in the previous audit, audit expectations in relation to the misstatement in the current. Conclusion: performance materiality is in the range of 60 to 70% based on the above factors and assessment of performance lower end of the range 60 has been applied. Therefore, performance materiality is set up for $24,000. I can even go with $20,000. You can easily say, even though the 60% represents $24,000, for the audit purposes, we can easily use $20,000. What will be the impact on the audit? The overall materiality that was used during the planning in September was 75. Since the actual materiality is significantly lower than the amount initially set in the planning stage, the audit team must revisit work that was completed and to ensure appropriate coverage has been obtained. This is the impact of the audit. This is the one that's gonna drive you to the C and C+.
Okay.
Here, that's the effect on the opening balances. It's opening balance is the one that drive you to that
Oh,
C.
my question is the transition of the approach. On the approach, usually that's when you talk about the whole thing about the opening balances, because in audit in the elective, I'm pretty sure they didn't put it under PM. They put it on the approach that since we have like it's not even under the approach. It's like you have a complete separate paragraph sitting on its own, speaking on those matters. Like you'd speak on the impact of buying, and then you'd also speak on the business combination because they bought another business, right?
Right,
And that business is going to have to they're going to have to decide whether they're going to provide combined statements, and then they're going to have to go and test all those things related to that new business as well.
right.
But usually it's just like sitting on its own
Which one? This
under.
part,
Yeah,
the impact on the
yeah,
audit?
yeah. I'm kind of surprised they put it under PM.
Again, you're defending here the materiality.
Oh, really?
Yes, this statement is related to the materiality. It's not related to the approach. And also, let's go to the Word document. I believe she asked you for this. Let's check because I believe she explicitly asked for this. Watch this. She discussed audit approach. No, provide performance. Assess the risk factors. Okay. Provide me with the recommended materiality and performance materiality. Audit approach. No, no. Actually, it's not. It's not kind of clear. It's not clearly there. But once you read this paragraph, the overall materiality that was used during this. So here you're saying that impact on audit. What they say? It's again is with the materiality because they're going with the thing that they have already audit plan set up in September. In September they already set up the materiality at 75. Now you're changing it to 60. Make sense?
Yes, makes sense.
That's why you have this impact because you planning for one thing, and suddenly when the time comes, everything changes.
Okay.
That's why
Yeah.
you have this discussion here. So now let's go to approach. Since this is a repeat engagement and the preliminary planning has been completed, we need to consider changes that will require to the plan audit approach and approach taken in the past. In the past, control was strong and able to rely on control testing, plus blah, 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 blah. However, CPA become ill, and again, case facts. As a result, staff was left without guidance. Again, case facts. No longer CFO not being executed appropriately. Therefore, it's unlikely that control test would be able to be performed without error being identified, and more substantive approach will be needed. It's necessary to come up with additional audit procedures that address the assertion at risk and provide appropriate audit evidence for the company. Another change since preliminary planning implementation new IT system, we have identified some weaknesses in the new system. However, this weakness may not preclude us from being able to test the other components of the new system. We must also consider the system only at the place 3 months as well. Substantive testing will need to be completed again, assurance. So you have to get first through the repeating engagement. It's going to help you for the planning, but then you have to adjust to the new situation, which the new situation is you have to increase the approach. You have to increase the testing amount of the testing. So your approach is going to change. Why? First, because the CFO, and second, because the IT system. Overall, because of the change, the issue of notable, the substantive approach will be needed than was used in the past. And then you're going to the procedures of the control areas. This he asked for the procedures. Yes, she asked for the procedures as well. So everything. So watch the question. The question is the one that leading to some extent. Even though it's given on the opposite order, some kind of backward. Be sure also discuss any changes required to our audit approach. I would like to know whether we'll be able to rely on control again this year. And if not, what procedures we have to perform. So since we cannot rely on the control again this year, because there's no control inside the company, and there's a new events that happen, we have to change the audit approach. And since we changed the audit approach, we have to come up with the new procedures. That's how I'm interpreting the the answers that we see. That's how they come up with this solution, right? Because he clicks there, because of the changes in issue, the audit with substantial approach will be needed then was used in the past. So whatever was in the past, we cannot rely on it. So let's change it to the new one. What will be the new procedure? Responsible control over the three main financial statements area: revenue, purchase, and payroll. And then you come up with the risk. The CFO has completed the detailed review, weekly sales listing team with the absence in the 4 months of the year. A review has not been completed. The change to the revenue recognition incorrectly, as well as seeking additional financing. Management may have the incentive to overstate revenue to demonstrate better profitability of the financial situation. Accounting assertions, obviously that will be reviewed, provided assurance over the completeness, accuracy, and cutoff of the revenue. And then you have to come up with the specific procedures. Can you come up with those? Can you come up with those ideas first? What you have to, what kind of way you have to put the procedures?
Procedures. Yeah, I can definitely come up with the procedures. That
But no.
that
First think about it. Where on the financial statements you have to put the procedures? And what procedures to put? Make sense?
So
Because
we're
they
not
just
doing my question is, we're not doing procedures based on the items we have. We're doing this based on the financial statements.
Watch this. We're doing those procedures only and only. Let's go back to the question. Only and only we've been asked to, can we rely on the control again this year?
No, we cannot rely on the control.
Okay.
We're saying no.
So since we cannot rely on the control, then we're making that discussion about any changes which are required in the audit approach. Since we're moving to the more substantive approach, right? What will be the procedures, since we cannot rely on the control? What will be the procedures that we have to perform in order to gain our confidence in the control again?
Fair.
Right?
Yeah.
That's why we're chasing this one.
So from profit and loss, we're going to select items from both the profit and loss and the balance sheet, right? That we're going to test.
Ideally, yes. We don't have any other available resources. Those are the only resources that we have. Right?
Okay.
When you look at the financial statements, is the only thing that we can look at. Because the financial statement is the one that the readers are gonna look for. Now, which is the most common area? Common procedures for common areas. Which are the common areas? And that's why we're chasing those. CFO responsible for control over 3. So now look at from where the angle comes. Internal control, right? Who is responsible for internal control? CFO.
CFO.
Is the CFO there? No, he's not there. What he was dealing with? Revenue, purchases, payroll. That's why we're chasing those ones. CFO was responsible for control over 3 main financial statement areas: revenue, purchases, and payroll. So now the question is, where in the case we can find this particular information about the CFO? Probably somewhere in the appendixes or somewhere in the conversation that we had with these guys, right? Are you with me here?
Yes. Yes, I'm reading it too, but I'm
Uh,
definitely understanding how we're coming up with that solution.
right. That will be the key here.
Mm-hmm.
Let me grab this. Okay, so I have here something. Let's see if that's gonna help us to some extent. On that meeting and the conversation that they have here. So all members of audit committee were present at the meeting. That was a result of the illness and death of CFO. We have some concern about 26 draft financial work performed on accounting staff in the past 6 months. Particular questions about the new investee fees we paid. Evaluation company provided to purchase remaining shares widely held in recent order vessels. No, there was no no description here on the duties of the CFO though. Those are all common. Common lobster new crane purchase. Okay, additional. Ah, watch this. Assure us additional information. Can you see my screen?
Yeah.
The following planning information was documented based on CPO knowledge. ACA has been client for the past 8 years. During the previous year's audit, no errors were identified. ACA's strong corporate governance with both an audit committee meeting quarterly and including the external advisor related and board of directors, there has been no changes in accounting policy applied. So those can be the factors which gonna reduce the risk, right? Any of those, plus the increase.
Mm.
Materiality. Previously, materiality has been set using the benchmark income taxes acceptable range 5 to 7. Materiality, performance materiality were not calculated at the planning time as internal financial statements were not available. Instead, the previous year materiality of 75 was used. This is for the planning. Test of the control. The following controls can be identified as a key. There you go. That's why we're chasing with the
Wait,
revenue, purchase and
okay.
payroll, right?
So now
That's
we're gonna have to change the procedures for those as well.
right.
Makes
This is
sense.
right. So basically, again, it's given. It's given. It's here. It's waiting to be used.
Oh my god, I hate payroll procedures.
Why? What's why? Why?
I
Why?
just hate payroll.
Sorry.
I hate payroll. So the funny thing, I did Densmore last year,
Okay.
and they had a section like this that came, and they were like, "Give us the procedures." I got NC for them. I got NC. It was revenue. It was payroll. They didn't have purchasing, and then they said the only thing that they changed was that risk has been set to fraud. Can you give us procedures that need to be done? It was the same thing like this,
Uh-huh.
but I just couldn't. I don't know. I feel like when it comes to individual account balances, I struggle with procedures like revenue.
Ah. On the revenue, why would you struggle for procedures? You want to see is this actually
Did it actually happen?
Yes. So you basically you're gonna trace it to the order, packing slip, invoice, shipment date, and payment. And is it actually recorded?
That's true.
Right? On the cutoff date, you're always chasing the completion because that's where the problems happen. The problem happen around the reporting date. Flipping income, flipping revenue from one period to another period. On the purchases review, we have to all the expenditures. Since there's no approval on the expenditure or anything like that, we're gonna chase the someone still need to be trigger the payment since the tariff signs of the expenses greater than $10,000,
That's fair.
right? That will be the existence, accuracy, valuation, allocation, payable accuracy of the expenses. Payroll. Let's see on the payroll. The CFO was reviewing the accounting clerk work bi-weekly payroll and also completing the monthly payroll. This is what's happening, right?
Mm-hmm.
Now, what we're chasing, completeness, occurrence, and accuracy of the payrolls. Occurrence and accuracy, how are we going to see this? Sample bi-weekly payroll register and ensure that the amount posted in the general ledger agreed to the amount being included in the bi-weekly pay support.
Support.
Should agree with the sample, hourly, hours, rates, validate hours work, bi-weekly payments made, request a listing of all determination from the human resource department to make sure that we're not paying somebody who's already been terminated. Completeness will perform the substantive test of the new hires. And for example, for example of new hires, obtain their offer. Okay. It's more like those will be like something, how can I say, very, very unique and very specific to the payroll. Have you done payroll?
Now I do contractor
So
payments.
what do we need? You need their time card to make
I
sure that
need
right at the time card,
exactly.
hours, rate. Then after that, you have to calculate how much you have to pay them. Make sure that you deduct the right deductions
I need the
from
contract
right.
to
You need
see
the
if they make.
exactly. Just so whatever you're doing in the everyday basis, just explain it, but adjust it to the current case. That's what will be the how can I say, that will be more practical rather than memorization. Because what you can see here on the occurrence, that's what they're looking for. Where is the report? Where is the payroll register? Is the amount correctly entered in the general ledger? For each, so we're gonna go do some sampling. We're gonna do samples. That's how we're gonna catch the occurrence and accuracy. And we're gonna check for those things. Once we check all the terminations, some of the termination, related letter of registration, record of employment to determine the termination date. Make sure that they not pay after the termination date. And completeness will be performed on the new hirees. Substantive test on the new hirees. Crazy stuff. Phew. Can you do it?
Yes. I just thought of my own experience as well. I don't think payroll should be hard for me now because I just started thinking of everything I do at work in a general,
Right.
like the calculations, recalculations, comparisons with timesheets. If I can write all those it's kind of like my experience. I might have to do for purchasing. I do. I'm actually the manager for expense accounting. So purchasing usually um we just
You need purchase order.
yes, exactly, the POs, to match the POs, to see if the accurate controls, like if there's
Right.
signatures, everything,
Right.
to see if the invoice has been recorded in the correct period,
Right.
right? For yeah,
And
those kind of
you need the purchase order. You need the shipping slip
yeah,
that
and the receiving
comes.
report, comparing to make sure that the goods have been actually received.
Right.
And then sometimes to avoid things like fraud, sometimes you might just want to look up a supplier to deem if the supplier is there.
Yes, just to make sure that it's existing, especially with the supplier who happened to be the what they had. One of the company, the owner of the company comes and say, "What's this $4,500 check? Personal check issued. I know it's signed by me, but who we paying here?" I said,
Yeah,
I don't know. Why you asking me? You sign it. Yeah, but you wrote the check. So what you're
yeah.
telling me now that I put your signature to? No, but okay, let's go and find the invoice.
Hmm.
I directly told him, let's go and find the invoice. He said, no, you go and find the invoice and then show it to me. No, you gonna come with me and we both gonna go and gonna find the invoice.
Hmm.
So he's coming with me. I'm grabbing the invoice, and once I saw the invoice, right away it comes. Somebody broke the window of the office. The guy with the window came, and he asked him, "Hey, instead of writing check to the company, can you please issue me personal check?" So he's coming to me, say, "Hey, let's do the favor to this guy." So instead of writing to the company, are you gonna be okay with to write it to the his personal? I said, "Yeah, you're the owner. Whatever, sign whatever you want. I don't care." And he signed it. And after that, coming after me. Once he saw the invoice, he said, "Oh yeah, I remember." Ah, you remember now,
Yeah.
right? But that's what we're chasing. Chasing here is the correct supplier, recipient of the payment, because I can I can have the purchase order, I can
Hmm.
receive the goods, I can
Yeah.
have the invoice and then pay somebody else,
True.
right? Instead of in back in the days, instead of Panasonic, we have Panasonic, which is close to Panasonic, but it's not Panasonic,
But it's
right?
not Panasonic.
Right,
Yeah.
right. So
Yeah.
you must come from Panasonic. We pay to Panasonic, and
Hmm.
Panasonic take the money. Panasonic stay unpaid. Sorry, but we closing the payment. Everything is fine. And happen that the Panasonic account is just the owner's account. Oops, small mistake. So that's why we're chasing those but again, why we chasing those ones? Because the case brings us to those areas. Let's move now to the next one. Next one is the procedures. Let's see, is there anything on the case that's going to drive us to those procedures?
Okay.
Here is the purchases. That's why we say revenue. There's procedures. Assurance Edition, new order or invoicing system. At late October, implemented the new order invoicing system, Flatfish. Testing customer place their orders online and ask the input on the name as well as the bringing the shipping addresses. Pricing depends on the volume. Staff can grant a discount up to 50% on the sale price once the sales order is Finalize the time sales department accounting department system. Upon acceptance, shipping department. Okay, this is for the bonus supplier arrangements. Supplier bonus arrangements continue, and that's okay. We don't have too much stuff here. Those old cases, they don't have much information on the on the appendixes, right? So now what we're chasing here? We're chasing
WIR. Every time we see a process, it's gonna be WIR.
right. So we move from the approach. We rely on we get to come up with the procedures. Now Sarah is concerned about the acquisition of Freezy. I would like to recommend substantive procedures related to the balances at the acquisition date and at year end as part of the audit plan. So it's very specific, it's very detailed what exactly we have to look. Where we can find that information in the case though? Probably on the financial statements, right?
Yeah.
That's from where we're coming. Come on, finance intimidation. Where did they lose the answer? Here the answer. So at the acquisition date, risk, fair market value, obviously. Acquisition used to determine the acquisition differential. So basically, you explaining here what's happened on the acquisition date and where the risks. So for the procedures, when you come to the procedures, I want you to have in mind this risk procedures, accounting assertions, of course, risk assertion procedures. It's pretty much like here, right?
Yeah.
Risk assertion procedures. That's how they did it in the old ways. Now we have to later probably we're gonna see how they're doing in the new days. Net working capital. How are we gonna get how are we gonna deal with the net working capital? So the net working capital, you know what the net working capital is?
Yes.
Current
That's
assets, current assets, current liability. That's your net working capital. Okay. Anything current working capital. That's why on the, if you remember on the statement of the cash flow, first we're doing on when we started the, what was that? The indirect approach, we start with the net income, adjusting to the cash income. And after that, we're doing changes in the working capital. We're starting with the accounts receivable, inventory, accounts payable. If you have a prepaid expenses, you're going with the prepaid expenses in any other payables. Accrual liability, that's also a part of the liability. And you're going now for the different things, for the different elements of the working capital, you're going different procedure. Bank, check the bank statement before 1 month before the year end and 1 month after the year end to make sure that you're catching everything there. Comfort over the existence of accuracy on the balances on accounts receivables. On the inventory, perpetual inventory, we're gonna do probably inventory check, what's on hand. You know how they're doing inventory in reality, right?
Yes. My thing is, are we
Yeah.
going to test every balance sheet item?
No, only the working capital.
Why only the working capital?
Because first you're gonna have, remember here, on the
Oh,
acquisition,
these are procedures for the freeze. Oh, okay. That's
right?
the company that they bought.
Right, the company that they bought, right? We're trying to find out where's the fair market value of the company. Because we on the acquisition date we have book value versus the fair market value, and that's where the you're gonna have the purchase price, then you're gonna have the book value of the company and acquisition differential, which acquisition differential later on will be distributed to first to the difference between the fair market and book value, and whatever left, it's gonna go to the goodwill. Remember that on the purchase days when we have a business combination.
Okay.
Are you okay with that? Do you know
Yeah.
what you know
No.
what I'm talking about, right?
Yes. Yeah.
Yeah, when you buy somebody, you either buying 100%, either you're buying over 50%, let's say 80%. It doesn't matter how much you're buying. Now you come up with the money that you purchase. Now, money that you're paying. Now the question is what you get,
Okay.
right?
Yeah.
Basically, you're getting the equity. In other words, you're getting the assets minus liability, which is
Okay.
which is the equity.
Okay.
That's a different way to say I'm buying equity. I'm going to say no. I'm going to buy. I'm buying the net assets. What is the net assets? Asset minus liability, which is equal to equity. And then we
Okay.
start chasing. Are those actually exist? Because we have to chase those assets and liability to find out. And is the fair market value used is actually correct?
So you're just reviewing the things that the
Right?
value they've put. So now in this case, wait, instead of calling it net working capital, can I list them like and say, okay, for
Net
cash,
assets.
and now
You can literally list it net assets.
list them and do one by one, right?
Yeah,
It's
net
fine.
put the net assets and start current assets, bank, accounts receivables, inventory. Let's go to the case before we it has to be on the case, right? It has to be related to the case, otherwise it doesn't make sense. They coming with something. Let's see why they come up with exactly those items. Let's go to that acquisition date. Common background, oral requirements. That's the same financial statements, except for financial statements, financial draft, okay, book value, property, plant, equipment, that's for test statements. Draft financial statements, CBTI, that's not what they're looking for. Common. Where is the purchase price? Oh, here we go. Do you see why they come up with the net working capital? It's right in front of us. Can you see it?
Totally.
So on the August 16, I see a purchase 25,000 common share frisbee for cash consideration 1.7 million as indicate as prepared independent appraisal. First item, net working capital.
Okay.
Next item, land. The next one item, plant and equipment. Last item, customer relationship and long-term debt. So what we're gonna do, we're gonna put procedures on any of those. And they're coming in exactly the same order.
Okay. Okay.
Right? First, we're starting with the net working capital. Net working capital go with the again, cash, accounts receivable, inventory, accounts payable. Those are the easiest one that you can get. And land, obviously that will be separate section. Property, plant, and equipment, separate section. How do you come up with the market value on this one? Obviously, for all those things, in order you to come up with the fair market value, you have to have independent appraisal.
Okay.
Customer relationship, obviously. How can you justify the customer relationship worth $2.5 million? Right? We need the expert to assist with
Yeah.
the evaluation. A long-term debt, we need to interest rate used to calculate the net present value, the future cash payment, and the independent appraisal. On independent appraisal, that's something additional here on the independent appraisal. If we plan to rely to that independent appraisal work, as they prepare the fair value user calculation, we should assess the completeness of the independence. Because he might be independent, but 60% of the company is my company, which he's working for that company as an independent appraiser. At year end, now you have to, this is at the, she explicitly asked at the control, Sarah, would like to have a note, what was that? Recommendation strategy procedure, acquisition date, and year end as part of the audit. So we have to do two sets. One was the acquisition date, and the other was at the year end. So that's why they're now coming with the year end. As you can see, independent appraisal at year end. Here they're starting at the acquisition date. What we're doing at the acquisition date, what we're doing at year end.
So it.
And those are explicitly asked. She explicitly asking for us in the requirements. Watch this. She's asking here. Sarah is also concerned about acquisition freezing, and would like to recommend substantive procedure related to the balances at acquisition date and at year end.
So at year, so these are two completely different things.
Absolutely.
Oh my God, Jesus.
Absolutely. I told you, every time when you see end, you can just highlight it and put the full stop. And when you're in rush on the exam, that's where you're gonna miss it.
Miss it, yeah.
And here, watch this. Sarah asks you to verify the calculation of the bonuses, full stop, to highlight any concerns. Ignore that end. End is just conjunction. Don't think that's the same thing. No. Here, identify the potential special reports. First. Second, discuss the respective advantages and disadvantages. Inside of the second, you have another two, advantage, disadvantage. Third, recommend option for the best that best meets the needs of the supplier. In the same sentence, you have 1, 2, 2A, 2B, 3. And here, she also asks you to discuss appropriate procedures. 1, based on the special reporting you recommend. Once you recommend the special reporting, get me the appropriate procedures here. These procedures, this is like a, watch this, procedures. All the procedures related to control. Procedures, substantive procedures related to the acquisition. Two times, acquisition date, year end. Procedures related to the this reporting that you're recommending. This case is all about procedures. Interesting.
Yeah. I do. Is there much of a difference with what you have to disclose at year end and um at purchasing date, like the two? Is there much of a difference?
Well, once you identify at the acquisition date that it exists and it's there and it's valid correctly, then you have to follow up what's happening after, right? Because on the investment especially, and the accurate of the associate. Now, since that's a you're purchasing, what kind of purchase you make? You not purchase the net assets, right? You're purchasing the shares. Make sense?
Makes sense.
So, is the other company is gonna stop exist? No. Correct. So what they
Correct.
get? So they still gonna go working. So now you as a parent, you have to make sure that they providing accurate financial statements. Because
Okay.
if they don't providing accurate financial statements, you're not gonna show them on your statements at the correct value.
Yeah.
So depends on which method we're using here. Investment is material. There's a risk that is not recorded in appropriate value. Of the income pickup is not accurate. So here accuracy, valuation, allocation, investment, and accuracy of the income from associate. So we're going to have to get the financial statements of the company, make sure that the investment is, since the investment is necessary to ensure that continue to be recorded an appropriate value on the income pickup accurate compared to the audit figures, amount of dividend to receive during the year also need to be verified. The correct deduction was made on the calculating the ending investment amounts because we're using probably equity method. You know that,
Okay.
right?
Yeah.
And we will conclude based on what has been told, significant influence. However, we should perform procedures to confirm that these terms is actually of the agreement. For example, we should review the agreement to ensure that does indeed have 2 or 5 director seats on the board. Where are we going to get this? Probably case. No, it doesn't say anything about the seats on the board. It says the has dividend financial statements. So again, from the case, we're going to get this. Watch this. It's given in the case. So on August, we purchased this. That's what's happened on August 16th. Correct?
Correct.
So that's what the procedures comes on the acquisition date. Then we now it's December 31st. And it says for the period of August 16 to December 31st, reported net profit after tax that much. The company received 55 dividend, cash dividend. Those are the things that we actually confirming. The customer registration is useful for the over fixed year, but it doesn't say here. Maybe there should be somewhere else on this that there are 5 people under control of the freezy. Did we notice anything about freezy here on the common background? No, not here. Red clamps. No, there was nothing on the freezer. I haven't seen anything in here on the freezer. No, the question is how they come up on the answer for that the people that are on the board. I don't see anything here related to that board's people. Neither here. Ukraine purchase, no. Anyway. Based on what we told, a significant influence, Freezy, on Freezy, the shell call. However, we should perform, what's that? We concluded based on what we have been told that AC has significant influence on Freezy, the shell call, that's our company.
Okay.
Right?
Yeah.
Then we're going to these control weaknesses on the invoicing systems. And the control weakness is going to come directly from the exhibit. Let's see how many control weaknesses we have here. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. 18 stuff. Let's go now to the case. And let's see how many things they're discussing on the case. What was that control weaknesses? There was one sheet with ginormous things, right? Remember we saw that one. Appendix. No, that's day 1. That's day 2.
Mm-hmm. I
This
think
is
it's after the materiality.
Yes, here for us. This is for us, right? Here.
Yeah, this whole part.
Right. So we have here 1, 2, 3, 4, 5, 6, 7, 8. They come up with 13. New invoicing systems, leading customer place orders. And they start one after another. From each of those, they're dragging something. Question again is, once you see something like this, can you come up with the control procedures?
Yes.
So
weakness.
identify the control weakness and then to suggest the improvement. Right? That will be the proper way to define this one. Get the weakness first, identify why is the weakness and how can we overcome it.
Okay.
Automatic accepting orders from the customers. This is case facts. Customer could input fictitious. Now the weakness is that he can put fictitious. The system should be programmed, what we can do, to do a few checks before accepting the order. For example, there are also database available that could use to have the system check up and could require credit card, which will be verified by the system before order is accepted. Then the next is automatically determine the price of the order accepting electronic. The pricing contained in the file could be out of date, which happens every day in the big stores. The pricing should be reviewed and updated regularly. Accounting staff have access to the master pricing file. Totally no.
It should be limited a bit.
Right. Access master pricing should be restricted only for the certain people. If it's not possible, so always, so what's the first? You have the control weakness, how you're doing it, and some additional elements, right? But here you have only weakness and how you deal with it. Here you have weakness, how you deal with it, and then you come up with another procedure. Again, what's the case facts, what's the weakness, and what we can do to overcome it. Again, case facts, what's the weakness, how we can go. So 1, 2, 3, 4, 5, 6 out of 8 statements, 8 paragraphs on that document. Remember? So technically you can come up 8 out of 8. Because technically when they write in the case, every paragraph is the problem.
Okay.
Next one is the verification and recalculation of supplier bonus, for which supplier bonus we have the whole appendix. Now, do you need the case to solve this? I don't think so. Because all the information is here on the case. Right here on the case. Supplier bonus arrangements. At the end of each year, supplier has sold lobsters, less harvest cost lobsters, this equal operating profit. Depreciation is included in the calculation. As a group of the supplier received bonus 20% of operating profit. And calculation is level.
Okay.
So in 2016, 20 suppliers earned the bonus. So the average bonus per supplier is 275,000 divided by 3750. It's including the harvest cost. So let's see what they're questioning on the. Oh, there's some more. Recently, some information has surfaced about the allocation of the administration and selling costs. In the past, this allocation was based on the time spent, but this year, due to the insufficient record keeping, the allocation was simply based on the last year time, which was 68.65 for the lobster business. However, in 2016, there were following significant differences in expenses in comparison to 2015. The company paid for the marketing study on the clams cost of 50,000. The new sales agent was hired specifically to market clams in Asia. Additional cost of this agent total $420,000. Oh my God. The new lobster packing design was created by the advertising consultant and made donation totaling 170. So all those costs are included in the administration and selling cost, which is on that number you're basing you're getting those 68.65, which coming here administrative sales cost. Right? So basically you deducting from their bonuses all those amounts.
Yeah,
right?
this was. Yeah.
Finally, there was a major repair performed in the lobster packing machinery. An operator had inadvertently jammed the equipment, causing damage $400,000. The cost has been included in the processing cost, but the suppliers feel that this is not a normal expenses and should be excluded from the bonus calculation.
Yeah.
And here in the processing cost, we put $200,000. Now they're gonna we have to question all those things that happen on the second part of the exhibit.
Interesting.
Right?
Oh my God. Okay. Yeah.
So,
If that
so
is my question now is
yes,
this is an audit question, right?
right. We are still on the audit here.
Oh my god. Okay. So you
This
have
is
to so
we're
we have
still.
to do the recalculation and speak on our findings.
So what she asked for is, let's see what she exactly asked, because she asked for us to do this. She asked us, finally, supplier concerned with the amount they're receiving as a bonus is not fair and feel they're being undercompensated. As such, Sarah asks you to verify the calculation of the bonuses and to highlight any concerns you have with regards to the fairness,
Okay.
right? So here is the fairness. You can even go a little bit ethical here if you want on that direction, but even though it will be too much stretch. CPA, they don't care about ethics. I mean, not that they don't, but not on the cases. Not on day 2 or day 3, at least. So
Okay.
that's why here they're questioning the bonuses. So you basically you're recalculating the bonus because she asked you to do that. And based
Mm-hmm.
on the above analysis, the reviewing administration should allocated lobster sales cost will be approximately that one. Processing cost for that 400,000 repair should be excluded. And the supplier bonus, once you recalculate it, is going to be that much.
Okay.
And then we go into the special reporting. Now, the special reporting, I want you to be prepared for the special reporting. I don't know if it's going to happen on May, but they're always throwing something like this. Either for the GST, either for the something, either for something else. They're always throwing something like a special reporting. Why they're doing that? Because you can easily solve it only by the exhibit,
Okay.
right?
Mm-hmm. Yeah. Um I have the I was thinking of it just before we started because I was like I have to read that special reporting again and remember the names and what each one gives, like what kind of assurance each one gives, and then you
Right.
have to disclose which one you're gonna go with and why. I
Yes.
think there are like three. I think there are three or two, and then you have to identify the names, what they're called, and yeah.
And you have to know the standard because they
Mm-hmm.
directly come from section 9100. Or that can be Canadian assurance standard 805. Is it going to be special consideration? It will be something else. I'm not very good at those reports, but you have to be.
Okay.
I'm expecting by going through the cases, we to get pretty much everything on the special reports because I have seen special reports in other cases.
Yeah.
From
Okay.
time to time, they're throwing those one just just for the love of the game, I guess. And then you have to provide once you do this, once you identify potential special reporting, discuss the advantages and disadvantages. Make sense?
Makes sense.
And the last one was the recommend the option that best meet the supplier's need.
Mm-hmm.
And once you do that, then we're gonna come with the procedures on the bonus calculation.
Yeah. Okay. It's now 2:17.
We,
Uh, yeah, we've gone over time.
then
Can
we
we
are,
continue?
so listen, we're gonna still go with 2 hours. Don't worry about the day. Even if
Okay.
if we go over, we're still on 2 hours. That's totally
Okay.
fine. Totally fine.
Okay. Okay. Perfect.
Don't go now crazy. 2.10 minutes. 2.2 hours and 14 minutes. No, 2 hours.
Yeah.
We're still on 2 hours. Don't worry.
Mhm.
Is this helpful?
Yes, it is. Assess recalculation of the bank. Ah, Jesus. Even I hate bank covenants. Oh my God. It's because the bank covenant relies on all the adjustments you're gonna make, right? So
Yes.
my thing is that once you mess up probably somewhere, you're
No,
gonna mess
no,
up.
that's incorrect statement.
Oh, really?
That's incorrect statement.
So is it just to be reasonable to show your calculations and give an explanation?
Let me show you how the market works.
Yeah.
You're penalized for mistake only once. Do you understand this?
Okay.
You cannot get penalty on the same mistakes more than once,
More than once.
right? So what that means is you miss the adjustment entry, you make incorrect adjustment entry on the current assets, which affect the current ratio. Make sense?
Mm-hmm.
So
Mm-hmm.
in that case, now once you do one mistake, that carry forward another mistake, that may carry forward for the audit procedures, that can carry forward on the. So that means I have to stop reading your answer, correct? No,
Correct.
no, incorrect. Now
I
you
still
go.
want to
So
see how you
now,
attempted based
now
on the reason. How reasonable were you on the attempt on another question that relies on that question,
no, the
right?
question. No, the question here is: are you consistent in your analysis? That's what the
Ah,
question is. Is the candidate consistent with his analysis? Yes, she made the wrong calculation on the adjustment entry. One mark deduction there. But after that, she's calculating the current ratio correctly based on the mistake, but still the correct calculation. Then she comments based on the correct calculation that she made on the current ratio. And she provides logically the uh, the discussion and recommendation based on that correct calculated current ratio. Is the candidate wrong? No, she is not. Make sense?
makes sense.
So you penalize only at the time that you make a mistake. After that, no more penalties. The mistake is not carry over or carry forward.
Okay.
So you don't have to worry about this. That's why don't hang out too much on the calculations. And if we have to go on the marking guide, probably we're gonna find out that if you don't calculate, if you don't the current ratio will be did she included this, did she included this, did she included this, did she included this. If one of them is no, that you're still gonna get your marks. And after that, the question is gonna ask, did she provide discussion uh, consistent with her calculation for the current ratio? Yes. Make sense? You can come up that
Yeah.
current ratio is not violated. Then your discussion is completely different in reality. Is
Mm-hmm.
that discussion consistent with the calculation of the current ratio? Yes, it is.
Okay.
Then recommendation is based on that. Is the recommendation support? Is the discussion the recommendation is supported by the discussion? Yes, it is. Done. So you don't need always the correct calculation. You need the correct discussion based on the calculation. If you made a mistake on calculation, well, you made a mistake on the calculation. That's it.
Okay.
Okay.
Yeah.
Awesome.
Current ratio.
Current ratio, yes, current ratio. Current ratio is easy. Why you so? Are you scared of the current ratio?
No. I'm
Cu-
oversensitive.
Current ratio. If you see that the current ratio is over 1, right? As long as you see that, that's, I don't know if you take finance or not, but probably you didn't. But anyway, if you once you see current ratio above 1, and if you see that is 142, or let's say the current ratio 148, bank asks you for 1.5. Normal recommendation that you can do is use the cash, pay a little bit accounts payable, bring it to 1.5. Do you understand this logic? If the current ratio is above 1, using cash to pay accounts payable is going to improve your ratio. But if the current ratio is below 1, using the same technique is going to worsen it. It's pure mathematics here. There's nothing scary here. It's just conclusion based on the mathematic phenomena. Play with the numbers. Get you one Excel spreadsheet and play with the numbers, and you're going to see that phenomena.
Okay.
Okay?
Yeah.
Earning before interest, depreciation, and amortization. That's another interesting thing. And not dividend pay.
If
Yes.
there's the breach of covenant, is it gonna trigger the going concern?
No.
Hmm?
Not yet. Not yet. Why? Why are you jumping so easy on the going concern? You can easily recommend go and communicate this with the bank. Come up with a new agreement with the bank. Who wants you out of the business? The bank wants you out of the business?
They might say no and say, okay, we'll give you a pass this time around.
Yeah. Bank doesn't want you to get out of the business. Bank wants you in the long term.
Mm-hmm.
If you are losing money, yes. Listen, don't get me wrong here. If your net income is negative for 2 years in a row, and you're violating the covenants, I'm gonna get. Yeah, you should get a going concern. Absolutely. I think we saw that one last week, right?
Mm-hmm.
But with not meeting the one of the ratios, one of the bank covenants, that's too early to go with the going concern. Don't even think to put it on the notes, even on the notes on financial statements, because once you put it, you're gonna scare all the investors, and basically you're gonna kill the company.
Okay. Okay.
Okay. Spend a little bit more time on this case. See if you have questions on this, and let's discuss those one next
Next
Saturday.
week.
Yeah, next week next week. I'm not planning this week to get sick again. Hopefully I'm not gonna get sick, so we'll be okay for Saturday, Sunday. Sorry about yesterday, but I just really need it.
No, that's fine.
I feel
That's
better
fine.
today. Yeah.
Yeah. Okay.
Okay.
So I'll go ahead and I'll debrief this, and if yeah, I'll definitely gather up any questions I have. I haven't debriefed the second one we did. I think we did. There's a case.
2015.
Mm-hmm.
That was the one with the losses, with the going concern.
Yeah, I have to do that one.
Yeah,
I have
but
to do that one.
keep yourself a note somewhere, right? Keep yourself
Yeah.
a notes, and once you go through some issues in the assurance, make sure
Mm-hmm.
you understand those issues, understand the logic of the answer, and next time when you see something like this, see if the next one follow the same pattern. If doesn't follow it, where are the tweaks? Where are the variations, right? Because again, the whole point here with this is we to draw one, how can I say, solution map on
Mm-hmm.
every possible scenario that's going to happen in the assurance. What will be the possible outcome?
Okay.
Okay.
Well, okay. Sounds good. Thank you
Okay.
so much, Ivan. Yeah,
You're
yeah.
very welcome.
If you can send me the video as well.
Yes, yes, yes. I'm going to send you this recording. Yes.
Mm-hmm.
I'm going to post it the way I posted last week. Okay.
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 Okay. Thank you so much.
Thank you. Thank you.
Okay. Bye.
Bye.